This trade reinforced one of my favorite setups, the weak high, weak low. And I'm glad I was able to backtest it here because it resulted in a great profit and reinforced a key learning for me. My name is Vine. I document every trade I take and every backtest I run as I work towards consistent profitability using market structure, supply demand, and price action analysis. In this video, I'm going to review this backtesting trade I took from my journal that presented a weak low and showed me what can happen when price action taps into that type of liquidity and targets a key external high. First, we'll look at the higher time frame narrative, then the lower time frame entry model, and finally review the lesson this trade taught me. Let's jump into the chart. We're here on the 15 minutes. We first want to establish our market structure. We have a swing low and have broken structure to the upside by taking out this high and creating a higher high. So we are bullish and therefore looking for longs. This represents Asia session and then followed by London here. As we enter New York session, we can see that we have a weak low that's been created. This is a weak low because it fails to take out the high, and therefore it becomes liquidity. So I've created a point of interest for myself represented by the green box. It captures the weak low as well as the last significant sell to buy candle here that created the upward movement that broke structure. So the thinking is that there could be resting orders here, which when activated could move price up to take out this high. That's the thesis for the day. Let's play price out to see if this key area is mitigated and then observe what happens. So a few minutes later, our key point of interest is mitigated. And so this is our cue to drop down to the 1 minute. Here on the 1 minute, we see the move down into our key point of interest in more detail. We can see the aggressive bearish move that created the mitigation. For me, I would be looking for this high to be broken since this is where sellers came in and aggressively moved down. If you want to be conservative, you can look at this high to be broken, but your risk to reward will be impacted. So it's a personal preference. For the purpose of this exercise, we're going to look at this high here. Let's play price out to see what happens. A few minutes before 9 o'clock, we get the break over our key level, which is denoted with the orange line. At this point, we can drop down to the 5 minute to find an entry. Here on the 5 minute, we have a nice fair value gap that's been forming following the 1 minute break above this line. For me, I'm going to look at this cluster of orders here as a key area where price is likely to return to before moving up again. With that said, I'll place my entry at this high here, stops below the low, and then I'll target the 15-minute external high for a 5.6R trade. Let's play price out, see what happens. And just like that, we hit our 5.6R return. As we can observe, price tagged us in, brought us up higher, and then pulled back. Now, at this point, we may have wanted to panic, but we believe our market structure thesis. And so at this point, you may have opted to move your stops to break even since we have broken some internal weaker highs. But at this point, it's a matter of personal preference. I personally like to play conservative, but I would have moved my stops to break even. From there, we never really retouch that area, but expand up higher to hit and break structure to the upside, which is something we had always anticipated. This trade taught me the importance of weak highs and weak lows. If you've been watching my other videos, you'll notice that I target weak highs and weak lows often because they represent the key narrative in what price action is telling us. In this case, it proved to be a situation where buyers were resting. And if we're able to capture a wave, we can ride it to align with the 15 external order flow. I'm not a guru. I'm just someone documenting the journey towards consistency using market structure, supply demand, price action analysis. If this breakdown helped you see the charts differently, then subscribe and let's keep sharpening our edge together. And if you want to see another trading breakdown just like this, then check out this video right here and I'll see you there.